Gani Minute, everyone. A very warm welcome to tonight's Preparing for Parenthood session, brought to you by the Women's Activities Portfolio and the Aga Khan Economic Planning Board. My name is Feroza. I'm the Vice Chair of the Women's Portfolio, and we're delighted to have you join us this evening. Firstly, a huge congratulations on the arrival of your newborn, or the upcoming arrival. This is a really exciting time for you and your family, but we know that you may have many, many questions. So we hope that this series will help you to answer some of those questions. A couple of quick housekeeping items to mention before we get started. We are recording this session, although the focus will be on our speakers and on the slides. If you have any questions or concerns, please don't hesitate to contact us after the session. We'll be conducting an evaluation poll during today's session. We'd really appreciate your participation, and please rest assured that your responses will remain anonymous. All our sessions have been recorded, so if you're interested in any of the topics, please check out the Smiley YouTube channel. And of course, if you have any suggestions for other topics that you'd like us to cover, please feel free to let us know as well. So as I mentioned, we're so happy to be collaborating with EPB for tonight's session with support from the Social Welfare Board. The Aga Khan Economic Planning Board's personal finance team are really taking a cradle to grave approach and identifying key milestones in life that require awareness and careful financial preparation. One of these milestones is, of course, preparing to start a family. And so we are really excited to be delivering this event for you today. We will, as usual, be taking your questions at the end of today's presentation. So please do post any questions that you have in the chat, or feel free to message me directly if you want to ask a question anonymously. We are also joined today by Shalina and Nassim from the Welfare Benefits team to answer any specific questions that you have in this area. So now I am delighted to introduce our speakers for today, because I think you've heard enough from me. So firstly, we have Farah Jamal with us. Farah is originally from Vancouver, Canada, and moved to London 10 years ago from Dubai. Farah has two boys aged 6 and 8. We are also delighted to welcome Nina Jivraj Stevenson, who has an 18-month-old and is expecting her second in July. Nina says, as a relatively new parent, she hopes that she can help some other new parents or those on their way to becoming parents with this exciting journey. So thank you both so much for being with us today, and over to you.
Great, thank you so much, Fizzy. And just to echo what Feroz has just said, we're really excited to be here with you and hopefully be able to share some of our own experiences and learnings on the journey to parenthood. Obviously, becoming a parent is a really big step and a really big milestone, and there are lots of considerations that you have to make. And one of them, of course, is around the area of financial planning and your kind of economic well-being. And Farah will cover wills and life insurance, maybe slightly things that you're not really thinking about when you're bringing new life into the world, but definitely important considerations. And just to flag that we are not experts in the finance space. We're simply parents who've been on this journey before and have done some research into this area for you. But we're really lucky, as Feroza mentioned, to be joined by members of EPB and also the Welfare Benefits team today. So hopefully we can answer any questions that you have, but if there's anything that we don't know the answer to, we'll be very honest and just say so. Thank you. So as any pregnant person is eligible for free NHS dental care and free prescriptions during their pregnancy and for a year after your baby is born. And it's really easy to claim. You simply speak to your midwife or doctor and you fill out a very quick form and you'll get a paper certificate in the post that you can use for both of those items. So definitely one to think about just as a sort of quick win during pregnancy and beyond. And in terms of your antenatal appointments, there are quite a few, and sometimes it can feel a little bit daunting when you've got to take time off work, but actually you are eligible to that time off work. No matter how long you've been in your job, you have a right to paid time off for that, for those appointments in addition to your annual leave. So make sure you speak to your employer, tell them when your appointments are, and just lock that in with them as soon as you can. The baby's father or your partner, they also have some entitlement to unpaid time off work to go with you to 2 of your antenatal appointments. So, make sure you're aware of those things, and, just be honest with your employer and get their support as early as possible. Statutory maternity, paternity, and shared parental leave, really important that you kind of get your head around what you're entitled to in terms of your own personal circumstances, your contractual arrangements with your employer. I'm not going to go into detail on that today because there is a whole previous webinar that goes into this in lots of detail, and we'll share with you the link to that as soon as it comes out. I think it's in the process of being fine-tuned and popped up onto the YouTube channel from the women's team. For some of you may be eligible for what's called the Sure Start Maternity Grant. It's a one-off £500 payment from the social fund of the government to help with the cost of your baby. If you live in Scotland, it's called the Best Start Grant. You'll get the grant if your new baby is the only child under the age of 16 in your family, and you or your partner get certain benefits such as universal credit. So do check by referring to gov.uk whether you're eligible, and then there's a simple claim form that you can fill in, and if you need any support with finding out your eligibility or filling in any of the forms, the welfare benefits team are there to help you. And we'll give you some detail on how to contact them a bit further along in the presentation. The Healthy Food Scheme and Health Start vouchers are also available for those of you who are entitled. And these are weekly vouchers for things like milk, formula, fresh and frozen fruit and vegetables, and vitamins. And you'll get those vouchers if you're at least 10 weeks pregnant or have a child under 4. And again, if you or your family are claiming certain benefits such as income support, universal credit, pension credit, etc. Those food vouchers are to the value of either £3.10 if your child is aged 1 to 4 or you're pregnant, or £6 a week for under the age of 1. And to check your eligibility and claim that, you just need to speak to your midwife, health visitor, or doctor, and they'll be there to support you. So child benefits an important, right and entitlement that you should get your head around if you're eligible. For under the age of 16, to £21.05, as you can see on the slide, per week for the eldest or only child, and then £13.95 per week for each additional child that you're responsible for. To claim, it's a simple form available on gov.uk, and we've included here some additional resources that you might want to consult that tell you a bit more about what benefits you're entitled to, and the calculator to help you to understand what you are personally entitled to. A heads up for those of you who may earn more than £50,000 a year, so after tax. So it may not be worth it for some of you, but definitely is if if you don't meet that £50,000 per year threshold. If your child is disabled or suffers from long-term health condition, there are other benefits that you might be entitled to. They're listed here on the slide. So the disability living allowance is for children aged 3 months to 16 years. And again, this is another regular payment that's there to help you with the extra cost of daily living with a child who may have some kind of disability and mobility issues. And you can see there that you can claim between that child. It is not means tested, so you're eligible for this information with you afterwards. The personal independence allowance is for those age 16 to 64, very similar to the disability living allowance, but just for the latter age bracket.
Yali everyone. So just to finish off this slide for Nina, our community has a welfare benefits team that's always around to help. And so if you need anything, you can call them for support. If you go into the section of Smiley under the directory, in the directory, you can find all the information you need. There's a phone number there for Naseem Hirani, who's actually on this call and will be available at the end for any questions any of you have. And Shalina, I believe, is also on the call, and they'll both be around to answer questions at the end. So keep those questions in mind. I think they've said to send them, through the chat so that they can answer them at the end. So if we can move through a couple of slides to budgeting for your family, and even the next one. So I know everyone loves talking about budgets and money. I know my husband and I do. And when you first, realize you're having a child, it's a shock. It's a shock no matter what end of the financial spectrum you're on. And the best thing to do is sit down and come up with a budget together. Budgets are important because the two of you can actually sit down and financially plan for your future. You can outline what your goals are, whether that be to have a car, have a house, how much money you need to put towards debt, savings, etc. And it helps you prioritize, what you need to have for the baby. It's also really beneficial because it decreases your stress. Most of people's stress comes from, money problems. And the more you can talk about it with your partner, and the more you can get down on paper or in black and white, the better it is. Go to the next slide. So what we have here is just a sample budget. I know every family has, their own way to do their finances, whether you're a single income household or a double income household. But it is definitely beneficial to go through what you earn, what your debts are, what you're spending on, entertainment, food, transportation, clothing, medical, everything. When you see it, it's easier for you to see what you can cut and to understand where every pound is going. If we go to the next slide. So a question that a lot of people ask is, how much should you put aside for a new baby? As I said, each family is different. So we did a bit of research, and excluding pre-birth expenses, so excluding, furniture that you'll buy, etc., and all that kind of stuff, in your first month, you're probably going to spend something around £500. In the UK, in the first year, the average UK family spends around £10,000. And I've done a little breakdown here, in the first month, what you can expect to spend on clothing, nappies, feeding equipment, etc. This number, when you see it, I know it sounds overwhelming. And even when I looked at it, I thought this can't be right. But when I talked about it with my husband, he said, yeah, that's right. Because you don't realize when you're buying nappies and, muslins and swaddles and all sorts of things that actually it really adds up. 64% of new parents are not prepared for this. So if we go to the next one. So this is just an example. An average baby goes through 3,000 nappies by the time they turn 1. So that means you're changing 3,000 nappies. And yeah, it's staggering, right? That's a lot. And even if you're spending only 13p a nappy, that's close to £400. So it really does, add up over time. If we go to the next slide. So what you need to do before the baby comes is kind of think about, what are your basic baby needs? I know a lot of people will say go to John Lewis or another similar store and just get kind of a big printout of all the things they need. And that list is staggering and it's overwhelming. If you break it down into kind of sections, these are the basic needs I need for my baby, and not get all the extraneous stuff. At the end of the day, we all live here in the UK. If you need something, it's readily available. So work on, transport. How am I getting my baby home? Once my baby's home, how do I feed them? How do I clothe them? Where do they sleep? So there's a small list here of, what you can do before you start purchasing things. Make a spreadsheet. of just the basic things you'll need. You know, you will need a changing table, maybe. You will need nursing accessories, a breast pump. Figure out where you're going to get it and the cost of it ahead of time. That way, as the months go, you can be putting aside from your salary a little bit every month to help with all of these costs. Can we go to the next one? So this is back to Nina.
Yeah, I'm on my iPhone hotspot, so hopefully a bit better. But Notion, sorry to be a pain. Can we just jump back a little bit to the bit where we talk about financial support for childcare? So they're perfect, thank you. So childcare is obviously a huge consideration. Some of us may choose to, be there 100% for our children and not, not send our children to childminders, nurseries, nannies, etc. Some of us may choose to do a mix, and some may need to put their children in childcare sort of for 5 days of the week whilst you're working. So it makes sense to understand what you're entitled to in terms of support from the government with those costs, because it can be quite daunting. So the tax-free childcare scheme is a scheme from the government to help working parents with the cost of childcare, and it can pay for registered childminders, nurseries, nannies, etc. And you can use it at the same time as using your 15 or 30 hours of free childcare, and I'll talk about that in a second. But you can't use it at the same time as some of the other benefits that are out there, like universal credit, tax credits, and childcare vouchers. To claim this, or rather what you're entitled to, is that for every £8 that you pay into your childcare account, the government will pay £2, up until the maximum of £2,000 per child per year, or £4,000 per disabled child per year. So as an example, if you put in the maximum of £8,000 into that account, the government will pay in £2,000. So that's £2,000 a year towards the cost of your childcare from the government, that's usually paid by the next working day. And it's something that you can check your eligibility online and also claim for online. Your 15 or 30 hours of free early education or childcare is another thing to be aware of, and it's for all 3 and 4-year-olds in the UK, because all of them are entitled to some free early education or childcare. And it can pay, again, for registered childcare providers like nursery schools and childminders. And this comes through your local council. So it's something you need to apply to your local council for. And some of the nursery schools actually do it for you. So they process that claim for you and they just automatically deduct that from your fees. So it's worth speaking to your nursery about that. So all 3 and 4-year-olds are entitled to 15 hours of free childcare per week for 38 weeks of the year. And some 3 to 4-year-olds are entitled to 30 hours of free childcare per week for 38 years. Again, it depends on your eligibility, and you can check that on gov.uk, and you can check your eligibility and what you're entitled to. If you claim universal credit, then you can claim back 85% of your monthly childcare costs. And to do that, though, you have to have paid the childcare provider already, provide receipts, and then you can claim the money back. So to be eligible, one or both parents needs to be in some kind of work, but obviously earning, to a point where they're still eligible for universal credit. Make sure your childcare is provided by a registered or government approved childcare provider, otherwise you won't be eligible. And in terms of what you can claim, as it says on the slide, £646 a month for one child, or £1,108 per month for 2 or more children. So again, a really useful contribution to those costs if you're in a position where you do claim universal credit. Obviously, throughout their lifetime, you can transfer between providers if you want to, but they need to just have the one at any one point in time. The ISA limit for this tax year is £9,000, so it's good to get started there. And Notion, if you could just ping along. I think there's a build, yeah. So on the junior cash ISA, you don't have any tax payable on the interest that you earn on that money. And it's very similar to a normal savings account, except that the interest is tax-free, and also the money is tied in there until the child turns 18. And with a stocks and shares ISA, the investment that they make, so the money that you put into that ISA then gets invested in various stocks and shares, and that investment is free from any kind of capital gains or income tax. And it basically lets you buy shares, bonds, or other investments on behalf of your child. But you need to be aware that the value of those investments can go up as well as down. So just, obviously be mindful. And as I mentioned, you've got a limit of £9,000 for the tax year.
Okay, so we just wanted to talk to you a little bit about having a will. One thing you need to do even before you have kids is to just make sure like all your admin is in order, and having a will is one of those things. The main thing to remember about having a will is if you don't have one, then nobody knows about your wishes and they can't be met. So if you die in this country without a valid will, it's called dying intestate. And it means that the government will decide not only how your assets are shared out, but who has guardianship of your children if, say, both of you pass away. The way it's divided here, if you don't have a will, is your spouse or civil partner keeps all the assets up to £270,000, and the remainder will get split between the surviving spouse, which gets 50%, and the rest equally between the children. So if this is not what you want and you die without a will, then you won't have any choices. A big thing to remember is custody of your children. I know it's a difficult decision, but it's something that couples need to talk about, because you may have different ideas about who you want to look after your children if something would happen. And it's something that just needs to be recorded. A will also importantly reduces the amount of inheritance tax. We don't want to kind of, bore you with too many details, because Wise Wallets has a lot of podcasts available. So if you go onto the Ismaili, you can access all of the podcasts, and they talk really a lot in detail about what you should include in a will, why having a will, etc. So we encourage you to go take a look. Go to the next slide. One of the big factors of a will and why people kind of avoid it is because they're worried about the cost. You can get a will done for as little as £90 if it's not complicated. And if you are a member of a trade union, it's possible that that union offers a free will writing service. There are a lot of websites that have will writing kits, and we've signposted one for you. And it's also in the Wise Wallets podcast. They've also signposted it there. It's called fairwill.com. And every November, participating solicitors in the UK will write a basic will free of charge if you donate to Will Aid, which is a charitable organization. And if you go onto willaid.org, they will give you a list of all of the solicitors that are willing to do that. And it's a good opportunity, to just get it done and keep your costs down. And just to reiterate what should be included in your will, obviously your assets, how much money you have, and property and where you want them to go. And not to forget like your personal pensions, insurance policies, building society accounts, etc. If you have anyone else in your family that you support, siblings, parents, you want to make sure you include them. Your children, who will look after them if something happens to both of you? That's really a big deal. And the last thing is who you want to make sure that your wishes are carried out, which is your executor. You have to think of that, you know, in advance and let them know so that when the time comes, they can make sure your wishes are met. I know these are morbid things to be talking about when you're having a baby. But you also have to consider life insurance. A lot of us don't know much about life insurance. We go to the next. So life insurance, the biggest benefit of life insurance is that it's a sum of money that is non-taxable at the time of your death. So if you sit down and consider your financial obligations and think, you know, if my mortgage is XYZ and I die tomorrow, what is the impact going to be on my spouse, on my children? Will they have enough money to, you know, stay in the home they're already in and carry on? This is an opportunity for you to leave them with a lump sum payment so that they can do whatever they need to do, pay off a mortgage if necessary. And it also mitigates your lack of savings. So if you're not able to put too much into savings, if you can pay into a life insurance policy, that means when you die, it will replace that lack of savings and it will replace the loss of your income. Okay, continue. So there's two different types of life insurance policies, a joint policy and a single policy. Every family has to, you know, look at the pros and cons and figure out what works for them. But the basics are, if you have a joint policy, it covers both of you, but will only pay out one time. And that one time is on a first death basis. So if one person in the family dies, it pays out a lump sum, but then that's it. It doesn't pay out anything else. It's often cheaper because really it's only covering one life. And what to remember about it is if someone passes away, or if a relationship falls apart, if there's divorce or whatever it is, that policy will not convert necessarily to a single policy, which means you're kind of still tied to it. It also, what it usually is, this is the most beneficial if you need the same level of cover for the same length of time. So you have to really look at what your debts are. In a single policy, you pay the amount of cover you want and it pays out when you die. So if you have, you know, X amount of pounds cover, it pays out when you pass away and that's it. There are often two breadwinners in a family now. It's, you know, things have shifted. And so often if a couple holds two single policies, that way when one partner dies, that lump sum money can replace the income, the loss of income, and your partner will still have their own policy. And obviously you can have different levels of cover and a different time commitment if you each have a single policy. So now the different types of life insurance. I know this is tedious, but just to break it down, a level term life insurance policy is a fixed amount of money for a fixed period of time. So if you say want a life insurance policy for 30 years for a certain amount of pounds, you select that and you pay a premium based on that. This is if you want, you know, especially for it's a mortgage. Basically, people are worried about the mortgage, and that way that money will pay out when you die, it will cover your mortgage. The problem is if you do this fixed period of time and that time carries on, you have a 20-year policy and you live 25 years, that policy will no longer pay out. And so you will basically lose all those payments that you've made. A decreasing term policy is for people you think your financial commitments will decrease over time. So if you're paying into your mortgage, not just the interest, but if you're making payments into the mortgage itself, so your mortgage is decreasing, what will happen is your insurance policy will also have decreasing amounts. Increasing cover takes into account inflation so that your payments increase yearly, as does your lump sum payout, so that your family will receive, you know, kind of have the same buying power now as they would in 20 years as they would in 30 years. And a whole life policy pays out only when you die, not within a fixed time frame. And it's important to check these details because I know for myself, an older member of my family, they had life insurance. after he lived to a certain age, the insurance company said, well, you're 80 now. We consider that we've covered you for your life because now you're 80. And he thought it will continue, and it didn't. So basically the premiums he'd been paying for, 4 years amounted to nothing. So it's really important to check those details.
Great. Thank you so much, Nina and Farah. A lot of incredibly useful information there. And just to reassure everybody, we are recording the session because I know it's a lot to take in. So the session will be available on the Ismaili YouTube channel in a few weeks. So if you want to go back and listen to any topic again, then you can do. But now we will be taking a few questions. So as I said, please feel free either to click the raise your hand button on Zoom if you would like to ask your question by voice. You can send a question on the Zoom chat box. And if you'd like to ask anonymously, then feel free to send me a private message. But while we're giving you a couple of seconds to think of any questions that you might have, we did have a couple that came through on the registration. So I will turn to those first. We had a question asking about the benefits of using NHS health services versus private insurance. We are holding a session next month looking exactly at that, so journey through the NHS, and we can definitely have a further conversation about the benefits of private health insurance versus the NHS. So please, whoever asked that question, please do join us for that session. But if you'd like to have a one-to-one conversation before then, please do reach out and we can discuss that with you directly. Another question that we had come through was around the different rights of single parents. So Nassim, I'll put that question to you, if I may. Obviously, we've looked at benefits and the eligibility criteria for a couple. Would you be able to shed any light on how that changes, if it changes for a single parent, please?
Yeah, so so for the single parent, they have to be 18 plus and state pension age, between that age, and it's means tested. So it will depend on if they are working and their income. Because of its single parent, and if there is a housing element of it, so then they would do the calculation according to their income, and universal credit is kept, because you have already mentioned in your slides about the replace those 6 benefits, like working tax credit, housing benefit, and what's the other? Yeah, there are 6 ones. I can't put in my mind, but they take consideration to all that, and then you get according to it. But you can go to the online, the Gov line for calculation, and I think you have put a link on one of the slides where they can calculate. They can put information in, and they will know how much benefit they would get. And if they have any queries, then we can talk one-to-one, with the individual.
Great, thank you. Before I go on, I have Hussein has raised a hand. Would you like to ask a question? I'll unmute you.
Hi, Pizzy. Yeah, it's actually gone.
Hi. Hi, I just wanted to ask the question regarding life insurance. Would you then recommend, if there's a risk that you do like a fixed policy and then you end up living longer than what you think, would you then just say, to avoid that, it's best to just do a whole life policy? And if you do that, are you then paying the premium for it?
That would be my recommendation. I mean, I'm not an expert, but because I know that happens, I think it's just a less risk if you do a whole life policy. Okay,
but even with, because I have looked into this before, and they have quite a few, like, if you it depends on how you die and all of that, and even then you can still not get a payout. And
yeah, you can't. I mean,
but there's no way to avoid it.
Yeah, the thing with life insurance is the best thing to do is really shop around. And if all, talk to a broker who will kind of lay out all the different policies for you and all the pros and cons.
Okay. And you would, by what you had in the slide, would you say that the single policy is better than a joint policy based on the fact that you said it was like on a first dive, first serve?
That's pretty much what it is, isn't it?
Yeah, because yes, basically, because that means that a joint policy,
breaking up.
If one person dies, then...
Sorry, Farah, we lost you there. I think you're back on now.
Can you hear me now?
Yes.
Yeah. I would say single policies, though they're more expensive, premiums are a bit more expensive. You mitigate your risk a bit more with a single policy.
Yeah. Okay.
So it makes a bit more sense, right? Unless obvious, unless both people die together, in a fiery plane crash or something. But we're really talking about most people don't. So you want to make sure that, if something happens, then you're covered.
Yeah.
And then especially if something happens to one spouse, then you're a single income household, you definitely would want a policy then at that time anyways.
Yeah. Okay. Thank you.
And the younger you are when you start, the lower your premiums will be. So if you start a life insurance policy once you're 68, your premiums are going to be a lot higher.
Yeah.
With whatever health conditions and stuff you want to consider.
And is it also the case that once you've got a dependent, it will be higher as well? Does it better to do it before the baby's born?
Yeah.
No, I don't think the dependent shouldn't make that much of a difference. It's more about your health, right? Because the policy pays out based on you. Okay. So obviously, non-smokers and stuff have lower rates. Somebody who's 65, smokes, drinks, eats fat, they're gonna have more expensive premium.
Yeah.
Okay, thank you.
I think I'm going to sleep very well tonight on a Sunday evening with all this information.
It's definitely overwhelming. Definitely.
Cheers.
Thank you, Farah. Elisa and Shamil, I can see your hand raised. Do you want to ask a question?
Hi, can you hear us?
Yes.
Okay. So actually, it's interesting that you mentioned that about the life insurance policies, and it might just be that the broker that we went through a while back, maybe had their own opinion on it. But I was under the impression that whole of life policies were actually really hard to get, and maybe in the past that was easier. But we were sort of informed that up until sort of retirement age, so the do you call it the fixed term, up until retirement age seemed to be what we were recommended, and that was sort of the easiest, like the most common kind of policy to get, and to get whole of life was really quite difficult. Or maybe it's just a lot more expensive and he didn't mention it. Yeah, but I wasn't sure.
It's definitely more difficult, and it's definitely more expensive. The thing is, like I said, a broker obviously would know more than us, more than me anyways. And the basic advice here is to, go to someone, get advice, and have it there. A lot of people don't have life insurance policies, and we would just want to encourage you to look into it and get what suits you.
Okay. Thanks.
So I know that, a lot of couples I talk to have not considered it because they feel, oh, I have, a rental property, my kid will be fine, or, oh, I have this, or, oh, I have that. But your house may have a mortgage on it, and your spouse may need that lump sum, tax-free money if something happens.
Perfect. Okay, so I don't think we have any more questions. So in terms of just finishing the kind of formal part of the session today, I just wanted to take the opportunity to highlight some of the ways in which we're here collectively to support you in your parenting journey. Obviously, the coronavirus support team, which is on hand for any support that you might need during this time, not just physical or logistical, but also emotional support. The contact details are listed here. They're also available on the Ismaili website and in Al Sahar. So please do reach out if there is anything at all that we can do to support you. I wanted to also highlight the Sisterhood. Many of you will have heard of the Sisterhood. It's a relatively new initiative launched by the Women's Portfolio, bringing women together to discuss different topics such as loneliness, relationship building, and discussing tools and techniques that we can use to support ourselves and our families. The next session will be on Wednesday, the 31st of March, and it's part 2 of our Stepping into Strength workshop. If you missed part 1, which was earlier this week, it will be available on YouTube shortly, so do look out for that. The next Preparing for Parenthood session will be on the 7th of April, and as I touched on before, we will be helping you to navigate the journey with the NHS, right from the early days of discovering that you're pregnant to understanding your entitlements during pregnancy and then when your baby arrives. And if you found today's session useful, we would really appreciate if you could spread the word about the programme to anyone that you know who is expecting or has recently had a baby and who might find these sessions useful. I also wanted to remind you about the Embrace programme, which provides one-to-one support for parents of newborns. This support really can be anything that is helpful to you as new parents, health-related, day-to-day guidance, and also if you just want someone to talk to. So please reach out to us or to AKEPB to find out more about this programme. Thank you also to all of you for joining us today.